Hi, welcome to the Market Alert for Friday the 2nd of September 2016. So yesterday, 1st of September, this is the market activity. As you know, I sent out an email late afternoon after the market had two trades, which we're just going to have a look at now. We had the first short prior to the ISM manufacturing figures, and this one actually hit the scalp before the news, and then the news came out, which wasn't good news at all. Let's just go to that. So you can see that 49.4, forecast at 52, 52.6 prior to this. This is also, if we have a look, this is US manufacturing crashes into contraction in August, election uncertainly blamed. I think this is the lowest figure, did I read in this article, for some time. Wherever it's gone. Anyway, it's bad news. The market actually is contracted, and we see the market move lower. It tries to bounce. We then get a second bite of the cherry on the short side with the bad news. First time actually the bad news is actually followed through, and then you'll see we move the stop price and the scalp, and then just trail the stop as the market driven through the scalp level. Sits on the 18,300 level, and then bounces back, and then the 50% stop there for 60 point profit. And then, as I said in my notes, expect the market to bounce all the way back, and sure enough, that's exactly what happened. And there's a rather humorous article on Zero Hedge this morning for those of you that are either young enough or old enough, having a poke at the Fed. Rick Astley, market rips back into green. Just as I said, the 1980s classic, never going to give you up. And this is obviously a dig at the Federal Reserve, who keep sending out the plunge protection team to bring the market back up. So a note of humour there for yesterday afternoon as well. But it's so predictable at the moment that it's laughable, actually. They will not let this market fall because of pension funds, etc., etc., etc. It's the last sort of bastion that they've got at the moment that they can actually manipulate. They can't do much with the housing market, but the stock market, they've got full control over this at the moment, as has Japan, which now owns 494 of the companies inside of the stock market, the Nikkei, that is. So God knows what Germany are picking up, thanks to Draghi's 60 billion a month corporate buybacks as well. So anyway, two profits on the initial hour, which is great. And then the market trading sideways thereafter, which again is predictable. We rally back, the market trades sideways. This is why I've been sending out notes quite frequently over the last month, trying to give some sort of guidance on what is happening, and also making forecasts which have been more or less on the money with regards to what's likely to happen following the first hour of activity. But then again, let's face it, you don't need to be a genius to work that out. There is a pattern of the market being brought back and trading sideways or staying sideways. On the daily charts, well, you can see the highest volume we've had for some time, and again the range of the bar pretty impressive, actually, given that the last time we had some major activity was a week ago today with the non-farm payroll figures. So the market looked poised to move back to the upside. No surprise after they brought the market back during yesterday. So what news have we got today that could actually move the market? Well, we've got non-farm employment change, which seems slightly odd. I thought we'd had this last week. Or am I missing something here? But anyway, this seems to be out today. I'm just going to go and check something, actually. Maybe I'm missing something. Just 1 second. Okay, I've got it. Yes, we do have the non-farm payroll figures out today, and that's absolutely brilliant. I don't know why, for some reason, I got this confused with Yellen's announcement last week at the Jackson Hole Symposium. I don't know why. Probably because she was talking about him on the employment figures. She's always barking on about those, and that she's saying that the Fed's data dependent to actually increase rates, and the participation rate of the labour market, all dressed up in flowery language, which basically means how many people have got a job. Obviously moved the markets last Friday for some unknown reason. I forgot about that. Maybe I have the onset of something. But so this price action is the Jackson Hole announcement by Yellen, and today we have the big one. So this is great news actually, because this is going to be very, very interesting. The forecast is for 180. The previous is 255. It's really going to be fascinating, because if this doesn't come out anywhere near, Yellen is let off the hook with regards to actually having to increase interest rates on the 21st of this month. However, if this comes out above the 180 figure, then she's slightly going to be painted into a corner and may have to actually move and increase interest rates. And we all know what happened after that. I was going to say a ridiculous decision, but not really. I mean, interest rates should be around 5% for a normal market. But we all know what happened in December when she increased interest rates just before Christmas, and then January saw a 2,000-point drop in the Dow. It's interesting that the rest of the world are going negative, and Yellen's trying to move the market back to the upside. There are reasons for that, which I will explain in another video, but it's to do with the yield curves, etc., etc. Anyway, so watch this space 1:30. This will all be factored into the market come 2:30, and it's Friday. So depending on how this news comes out, I will report in and let you know and try and give some sort of indication. But if I don't, let me just put it this way: if the figures come out about the same, first hour busy, then forget it. If they come out worse than expected, market down, market brought back. And if they come out better than forecast, one direction, market moving to the upside. That's how predictable these things are these days. And then finally, we've got the implied volatility, which is at 1079. The volatility actually is quite perfect at the moment. I wouldn't want to see it move too far to any extreme, because we're getting some nice trades. It's been a great week, given the last week of August, which tends to be really quiet. So it'd be nice if it could maintain this. Also, while I'm thinking, and in conclusion of today's market alert, we have the US market closed on Monday in observation of the Labor Day celebrations. So there will be no US market on Monday, but I will record a market alert just to review what's actually happened. But the next one after that will be on the Wednesday, of course, as we have to wait for Tuesday's activity to come into play. Right, well, that's it for today. Have a great weekend. I will report in as and when. Other than that, thanks for watching. See you in the next one.